Welcome out to the next edition of the Trading Justice Podcast. This is Mark Justice, joined with my brother Matt. And we're going to talk a little bit about elections, as elections are starting to get a little bit more buzz in the market. Have been largely ignored, to be honest with you, for the previous months. People mention them, they know what's on the calendar, but they've been kind of ignored. That's kind of changing. We're going to talk about elections a little bit. I'm going to quiz my brother on some election market facts towards the end of the podcast and talk about the general market moves that are occurring on the election itself. Before we get started, and we're going to be talking about technicals here in a second, would like to talk about the upcoming master trader class. Understanding the technical backdrop of this market is something that we strongly believe in, and we want to teach everyone to read charts like a pro. It makes trading easy. It makes your investing decisions a lot easier. And Matt, we're going to hold a thorough master trader class here in a couple of days. Tell us a little bit about it.
Yeah, our upcoming Master Trader course, and we teach it every single month for our pro members. It's a 2-day course. We're teaching it on Monday and Tuesday. That's October 21st and 22nd, 6 p.m. Eastern Standard Time. It is free for pro members. So if you're not a pro member and you want to learn about technical analysis and trading options, all you got to do is hit the link in the description below. Sign up for a free trial membership of Tackle Trading. Come hang out with us in Master Trader this week on the Monday and Tuesday this week. So honestly, tomorrow it's going to be a lot of fun. Coach Gino and myself teach Master Trader, and we have a lot of fun each month with the pro members in that course.
Yeah, so many times in 2024, Matt, we've had these grindy bullish conditions, right? Where you are in identifiable bullish conditions, very healthy technicals, but you don't take off like, oh my gosh, parabolic type situations. I love these market conditions. They treat me very well in my style of trading. And they're very healthy and they're very slow, but they can be very straightforward. The only complaint, and have you break down some charts here in a second, is that, well, there's been too broad a participation lately, and that's what
I don't know if that's a complaint.
I know, right? It's like when those are your nitpick complaints, like then it's a pretty good backdrop. But we've seen pretty healthy technical conditions in small caps, in technology, in broad market itself, in your average stock and RSP, in industrials, in materials, in utilities, right? We have a lot more healthy charts than we don't as we start the coming week, don't we?
Yeah, I mean, there's still pockets of volatility out there for certain, but when you look at the actual technical backdrop of the market, you really see a very consistent marketplace over the course of the last month and a half or so, and it certainly has started to pick up as we are getting into earnings season. Obviously, we just got done with the first week of earnings season. Now we go into week 2. It's obviously going to be an ongoing conversation, but to answer the question from a pure technical perspective, Mark, you look at the backdrop of the market right now, and you look at it from a very consistent perspective. It's participating at consolidation where you expect it to participate. It starts to pick up at support where you expect it to start picking up at support. You have a consistent backdrop for the market. Now, earnings is going to provide a little bit of that volatility over the next couple of weeks. Obviously, the election, as we get closer to the election, we'll probably see a little bit of market volatility as we start heading into the election. But from, once again, a pure technical perspective, I got this as a very consistent marketplace. In fact, when you look at the market from a technical perspective, there's a lot of ways you can kind of parse that information. One of the ways I look at it is through the lens of potential average yield, and if the upward movements in price versus the downward movements in price are fairly consistent in that backdrop. And when you're looking at the market right now, kind of tracking that current trend in the market, I talked about this at length in the newsletter and the technical update in the Tackle newsletter this week. But I got this in what's called a wave 3 of the current trend. And when you're looking at wave 3 of the current trend, you usually see a little bit of additional momentum in wave 3 on a trend than you do in the early beginnings. And so when you're looking at this current trend and you're trying to make the assessment of where can this thing go? When does it get overextended? When does it get exhausted? When do you start getting into the, oh no, we're going through a profit-taking session versus anything else? Well, at right now, the current resistance level, what you're seeing in the market right now is the development of a high base pattern. A high base pattern is simple consolidation at the top end of a current move in the marketplace. When you see that 4 or 5 days of consolidation, that's not a sign of weakness. That's a sign of hesitation within the existing trend. And so you're taking a little bit of a break. The market has ran a little strong. For example, from the current support level to the current resistance level, you've ran from 565 up to 585. So you've ran 20 points before you start consolidating. Well, once you start consolidating, that's not the end of this leg in the market. A high base, especially if it's a short-term high base where you're really just waiting on the 9 EMA to catch up to it, that can happen within the existing leg of the marketplace. And so when you go back to the past and you say, okay, how far did the market run from support to resistance last time, for example, before it got real exhausted and went through 2-3 weeks of consolidation? Well, that went from 540, the previous pivot point, all the way up to 575. And so the previous movement up in the market took about 35 points. We're about 20 points into the current move in the market. And so when you look at that, you look at the high base, which is the existing pattern in the market right now versus the bullish uptrend. And you say, all right, this market still looks like it has a little bit of room on the top side to continue to run before you get into some degree of overextended situation. And it's really important to understand overextended areas of the market, because when something gets overextended, you want to start tapping on the brakes. You want to be a little bit cautious. You want to start getting into profit-taking mode versus, being that aggressive buyer out there. And so when you're looking at the market right now, yes, are we elevated? Absolutely. But we're elevated because of the consistency of what's been happening in the market over the course of the last couple of weeks. But are we overextended? The answer is no, we're not overextended. Not yet. Those are different conversations.
And this is something I appreciate when you put it in the Tackle Trading newsletter. Like, I write part of the newsletter, you write part of the newsletter, other coaches will write parts of the newsletter, but you write the technical parts of the newsletter. And I'm always looking at that because I'm one to take profit. It's like you learn to take profit, right? And the questions I'm always asking internally is, does this market have another oomph to it? And I like reading on your section where you talk about the oversold, different indicators that give us kind of clues, right? Like, are those clues there that this, and they're not there yet.
Well, it goes to the general mindset of, are you looking to lock in profit in the current leg of the market, or are you still actively looking for opportunities? And when you got a high base in a mid-tier little moment in this trend, remember, the previous upward movement in price went about 35 points. We've currently went 20 points. And so you're right there about 20 points into this leg. You got a high base. At that point, you're looking for a breakout. You're still actively looking for opportunities, versus when you start to, get into that, potential average yield and how far something can move. You're not actively looking for opportunities. You're actually actively looking for reasons to lock in profit.
Yeah. I got two things to comment. Let me save the negative one here for a second. I'll get to that here in a second. The interesting thing about this move, Matt, to me, has been the lack of rotation, if you will, in the sense that it has been very broad-based. We saw the last big rotation we saw is when we saw the defensives, right? There were some growth worries a couple months ago, and we saw healthcare, and we saw REITs, and we saw staples, and it was clear rotation, clear one area of the market. The only real thing we've had from a rotation standpoint over this last burst has been, well, defensives have kind of taken a break, maybe except for utilities, who are playing off the AI theme as much as anything. But we've seen just pretty broad participation, right? When you look at the heat map, this is from this last week, correct? Or is this?
No, I'm going to go through different timelines.
Oh yeah, break this down, because I find this interesting. I find this.
You're absolutely right, Mark. I mean, let's face it, for about 2 consecutive years, from 2022 all the way into 2024, it was really aggressive rotation, from the Mag 7 against defensive versus cyclical versus everything else. There was like pockets of the market could have really, really good momentum, and other areas would be going down, whereas three areas of the market, for example, would be going sideways. It was really a sector rotation area of the market. Ever since the central bank decided to basically rip the Band-Aid off, leave the pause, enter into a cutting cycle, we've had a different market environment. We absolutely have, and it hasn't been one of, if one area of the market's going to be really, really good, it's going to come at the behest of another area of the market. Whereas right now we're seeing it, one area of the market doing really good, you're just seeing typical trend analysis in other areas of the market. For example, I'll give you an example of that. When you look at the defensive areas of the market over the course of, say, the last little bit, right? Let's just say the defensive areas of the market, like consumer staples, as well as healthcare over the course of the last month or so. Mark, they haven't really shown a tremendous amount of volatility. They have shown pretty standard top of the trend pricing is what I would describe. And so when you're at a late stage of a trend, it is typical to see some degree of continuation pattern, some degree of reversal pattern, to go through some degree of prolonged consolidation as other areas of the market heat up. And so what we have seen since the Fed did what they did a few weeks ago is we've just seen areas of the market that were already really, really good going into that moment start to show hesitation. So you saw hesitation out of real estate. You saw hesitation out of healthcare. You saw hesitation out of consumer staples. But those areas of the market were also late stage trend going into that moment. And they've really just seen consolidation. Utilities
they're just
back up, real estate right back up. You're starting to see bullish pricing coming back into staples, back into healthcare to a certain extent. But as you're starting to see that, once again, are you seeing it at the behest of some other area of the market? And I would say no. When you're looking at discretionary, for example, that looks absolutely fantastic right now. When you're looking at communications is hesitating in a really good breakout formation right now. When you look at technology, kind of hovering right back up there in a underneath the previous all-time high, but certainly starting to show a little bit of bullish trend analysis out there as well. And so you're absolutely right that when you're looking at the overall broad market, you really haven't seen any area of the market outside of energy, which is obviously trading on something vastly different than what the rest of the market is right now. You haven't seen an area of the market be that bad in the last 6 months. In fact, there's only one sector that is down in the last 6 months. That's energy. When you look at the last 3 months, there's only one sector down in the last 3 months. That's energy. When you look at the last month, there's only...
And Matt, when I look at these numbers, these are ridiculously close to each other when you look back at history at things. I mean, the range of who's the best versus who's the fourth best or fifth best.
Think about the last month, Mark. Utilities is the number one sector in the last month. Guess what's number two? Technology. When was the last time you...
And guess what's number three? Basic materials.
Exactly.
You have
and then fourth is finance. And they're all like 4 versus 4.5% in the last month. And so you're absolutely right that we're not seeing just technology take hold, technology go up, and leave everything else behind, and the market's up 5% because technology is up 12%, right? That's not what we're seeing. We're seeing really good price action happening across the board so far. And specifically in earnings season, I will say this. I feel like the earnings, the market has had a little bit of rosy colored glasses on, a little bit of those beer goggles on when it comes to the earnings landscape so far.
Yeah, we're going to talk about that in 2 minutes here. The one last thing before we leave the world of technicals and charts. Well, do we ever truly leave the world of technicals and charts? You and I, not really. But there's this nagging question on my mind, and a lot of it is recency bias. And we're going to talk more and more about the election in the next few podcasts as we have an election coming up.
Is there something?
There is. It has been this, and I don't think I'm alone here. Where's the pre-election sell-off, right? Where's the pre-election sell-off, right? Like you just assume it's going to happen. This time. And probably not, right? But it is.
I say that kind of joking.
Yeah, But you know, and listen, as traders that have been trading for a few years, in 2016 we had a sharp sell-off before recovering a few days before the election, because that's been the pattern the last few elections, right? Sharp sell-off, and then by the time election day comes, it's all gone. Like the sell-off's already been recovered. And then last year, time in 2020, you had that sharp sell-off, quick recovery into the election, right? That's been the pattern. That doesn't seem to, you know, so there's like in my back of my head is like, do we get any pre-election volatility related to the election? I mean, we're 2 weeks out, man. The window for pre-election volatility to occur, it's like if it don't start this week, when's it going to start?
And I don't know exactly what you have on your mind for, you know, the feature when we're talking about pre-election market activity and what you're going to quiz me on, but I would say we have some differences this time around versus 2016 and 2020. And in my estimation, the number one difference is the betting markets. The betting markets have the market, meaning the stock market, they have traded a little bit on those betting markets.
I'm going to have to stop you right there because we're going to be talking about that.
It's something I've been tracking. And so
we are going to be talking in about 25 minutes or so about the betting market.
So I'll save
that. But that is just one of the things in the technical situation that I'm like, oh, if we do see volatility, it's like it would have to start this week. Like, because by the time you get in next week, you would already be in recovery mode based on every historical trend. Like
if we go through volatility, personally, my personal opinion is if we go through pre-election volatility, it's going to be based on, I think we could see pockets in certain areas that have been trading based on gambling markets and not based on polling. I do think you have some pockets of volatility out there, certainly, but in terms of broad general market volatility, I just would have to say that the earnings conversation is going to be a little bit more important to the market than what happens in a 50-50 situation on the election. But I'm also like an earnings guy, and so that's like going to chiefly be important to me when it comes to how this market looks at the next couple weeks before the election. Obviously, after the election, we usually do see some pretty radical changes in pricing after an election, but in front of the election, you're talking about the heart of earnings season, and going into that last week before the election, you're talking about Apple, Google, Amazon, Microsoft, Meta. You're talking about the biggest companies in the world that also have a sizable impact on the blended growth of the market right now. In fact, think about this, Mark, blended growth right about 3.4% right now. Without those projections coming out of the Mag 7 components right now, blended growth would be at a negative right now.
Yeah. All right. Give me 30 seconds.
I totally, yeah, go ahead.
All right. Because you know, elections are more drama than they are to markets oftentimes than they are, like headline drama, discussion drama, water cooler drama than they and when I quiz you on a lot of stats,
we'll save it.
Because
thoughts on it. But,
because what obviously happens is the macro that existed before election isn't tremendously changed post-election. Sometimes there's themes that start.
There won't be one change to the economic reporting of November versus October, whoever the president is.
Because, you know, you look at the market had a terrible month after the 2008 election, but what's occurring?
Context matters.
Exactly. And that's what it always comes down to, context. And so the earnings results now, and let's get into earnings right now. And this is another thing that stood out in the newsletter when I was reading it as a consumer. I was like, because I always read the newsletter that we put out at Tackle Trading as a consumer. You know, the one thing I appreciate about you with our earnings is that you call balls and strikes. You're like, this is a good number, this is a bad number, this is this should be better. And that is one of the things when you were talking about blended growth in the newsletter, and you were just talking about right there, is like early on, like, and how many of the S&P 500 companies have we had report about to this point?
We've had about 12% of the market.
Yeah, so like, it's still a small sample size, right? Still small
Very.
sample size.
This
But
is the week going into this week where you start to get a lot more representation from the market.
but we got a big chunk coming up. But the numbers right now, you normally start to see this blended growth numbers accelerate, and it will accelerate during earnings. That's not what we saw this last week, was it?
No, but again, I maintain what I did say last week about the kickstart to earnings. Earnings has been good, and I don't want to throw cold water on that. Earnings has been we have had a good start to earnings. Now, have blended growth went down? Yes, blended growth has went down. But if you'll recall, blended growth specifically is the evaluation of the analyst expectations of EPS versus what actually these companies report on. So it takes into account the 12% of the market that has already reported EPS, and it takes into account the projections of the next 88% of the market. And so obviously blended growth is still moving more on the actual expectations than the actual reports that are coming out. And so when you do look at, like we were talking about with the election, context matters. When you look at the blended growth of 4.4%, we started the quarter off at about 4.4%. We're down to 3.4%. And that is not good a week and a half into earnings season, especially with where earnings projections were at a low bar. And so you certainly want to see, from a macro perspective, blended growth impact. But also context, like I was talking about, does matter. When the primary reason blended growth has came down is some of the projections out of healthcare have gotten a little worse. Some of the projections out of energy have gotten a little worse. And then some of the actual results out of healthcare specifically, I think about ELV, for example, who, lowered guidance, came out with a little bit of a miss. I think about United Health there, for example, gap down on a miss as well. And so you've had some mixed reports out of healthcare, and then you had some guidance projection lowered out of healthcare coming into, a pretty good important next couple weeks. And so, yes, blended growth is down. There's no doubt about that. And we do need to start seeing that turn around. And that needs to start turning around once the growth areas of the market start reporting. And so the first week and a half of earnings is really healthcare. It's a lot of finance. And so you get a little bit of the cyclical side of the equation. You get a little bit of the defensive side of the equation. But outside of that, you don't have a lot of growth reporting yet. You've had Netflix report, you have Taiwan Semiconductor report, and obviously you've had ASML report, but you have not had a tremendous amount of the growth side report yet. And when you do look at that, specifically the AI side, which is where a lot of the growth is coming from in the S&P, we haven't seen those reports yet. We haven't seen Google yet. We haven't seen Microsoft yet. We haven't seen Apple yet. We haven't seen these massively important companies. And yeah, I keep, I'm an AI guy, certainly, but try to paint and write the story of this market without the AI growth story. And so if you're looking for that blended growth to start increasing, the next 2 weeks are vital for that. And a heck of a lot more important than the first couple of weeks, I remember a couple of quarters ago, blended growth, or 3 quarters ago, blended growth went down aggressively in the first week and a half, but responded really, really brilliantly over the next 3 weeks. And it came down because 2 very aggressive downgrades in healthcare. And I'm seeing that a little bit this time around on blended growth as well. So I don't want to paint it as a negative yet. Okay. It's a slight concern, but I don't want to paint it as a negative yet, because you could see sizable moves once you start getting into the next couple of weeks of blended growth. I will say this. If the week before the election, we're still talking about blended growth in the 3 to 4% range, this has been a bad earnings season.
Yeah. And let's, do you have an earnings whisper calendar for the earnings? Pull it up on the newsletter. Just looking at the week ahead. This is one of those weeks where Tesla's not a market story for me, though, right? When's the last time Tesla moved the market? It counter trends the market as much as it moves with it.
Tesla's not a market story.
Like, it's a Tesla story. It's an important story. It's a fun stock. Like, it's important stock. But it's not like, like Tesla can gap down 10%, market can be up 1% that day.
If Tesla goes down 10%, I wouldn't say the market has to sell. No,
no, it just hasn't been that.
Other company the size of Tesla would do the same thing, yes, they would sell. But Tesla in the last couple of years has taken on a different a different importance to the market. Certainly a vitally important company to the discretionary space, but I wouldn't say they're a catalyst for the market itself. Especially with EVs being a unique story in and of itself. Obviously, Tesla's a major component in that AI conversation as well. When you are looking at the earnings landscape this week, Mark, and let's just kind of look at it this coming week here. That's last week. We're still on Sunday here. So let's look at the major market caps companies that are reporting is really Tesla this week. You don't have another company besides.
And that's what like my main takeaway in looking at the coming week is like, I got a lot of companies. I'm going to have some good context for overall, because I got companies everywhere. I find, every sector, this is a big, but it's not that, oh my gosh, look at Taiwan Semiconductor. I have to circle the calendar this week. Or like I will,
No, in fact, you did have to circle the calendar.
Taiwan Semiconductor, if they had missed earnings on Thursday, and they'll be in stock, like we're going to talk about them.
Yeah, I'm sure they're in your top 5. I'm sure
they're in my top 5 stories. But like, had they missed, that would have been an adjustment for me in position.
That's the entire storyline. If they miss after ASML, we're talking semiconductors breaking support. We're talking volatility. We're talking concern. We're talking market pullbacks. And that's if Taiwan Semiconductor would have missed. If we see a Tesla miss,
there's not a single company
but even outside of Tesla, and there isn't a bunch of big dogs reporting, but you have this collection of stocks in the S&P 500 that when you take it at large is going to have a more important impact than what Taiwan and ASML did.
The overall story is going to be more interesting than the individual.
100%. When you look at the S&P 500, you got 110 earnings companies reporting earnings. When you look at the Tackle 25, some of the better, covered call stocks in the market, obviously some of the better fundamental stocks. You got FCX, GM, and Range Resources reporting earnings this week. When you go to the AI Gold Rush watch list, which is a very important watch list to track for AI growth and technology in general, you got Tesla, SAP, IBM, now Nextera, Honeywell, FCX, Digital Realty, and Dow. Some of those obviously cyclical names, but obviously the AI storyline has expanded outside of specifically the innovators of the AI space. And so you got important companies. And again, this is where I think the importance of the earnings conversation is that it broadens out this week massively. And specifically, if you're going to look at the earnings landscape through the lens of sectors, I would keep an eye on the industrial sector this week specifically. You got 25 companies.
That's a good call out.
Industrial sector that is at an all-time high in a high base type pattern. And you get a tremendous amount of important companies out of industrial. GE, obviously one of them, but look at the amount of aerospace and defense companies you have reporting this week.
And industrial has a very nice, clean technical pattern entering this week.
100%. And so you obviously got a lot out of industrials. I think that's going to be a very important one. You do have 14 companies reporting out of the tech space. But the leader is IBM. And I'm sorry, it's not going to take, the tech space isn't going to take cues from IBM when you got Microsoft, Apple, Amazon, Google, just coming up down the road a little bit. And so definitely you're going to start to see a lot more reports out of the industrial space this week. And I do think that's kind of the sector I'm really looking at, specifically aerospace and defense companies this week, which basically feels like every single aerospace and defense company reports earnings this week.
All right, we're going to shift macro matters. We're going to shift to the economic discussions. Only going to spend about 2 minutes on this because there's not a lot to talk about. The macro themes on the economy, inflation, been very straightforward. More people in the soft landing, economic reports beating over the last month. That trend continued this week with retail sales, Philly Fed, and unemployment claims coming in line. People got an eye on inflation, not worried about it yet. Nothing changed this week. And Matt, to be frank, and we talked about this last podcast, that this isn't going to be a story this week. It wasn't a story this week. It's probably not going to be a story this coming week either, because when you look ahead, You just don't have the data points to shift the conversation, because even if PMI numbers come in soft, well, that's one data point after a string of positive data points, right? That's not going to shift the narratives, right? So you're just in this very easy to understand macro narrative environment. Economic data has been improving. People are talking about soft landing. They're not going to talking about growth worries right now. They're really not talking about inflation. It's been a pretty straightforward macro backdrop on the economy and inflation, hasn't it?
Yeah, it really has. The last couple of weeks, ever since the Fed pivoted, we have not seen concerning economic data since the Fed pivoted. And you can make whatever you want out of that, but at the end of the day, we haven't seen it. GDP, Atlanta now GDP is currently at 3.2%, and the CPI annual rate is at 2.4%. Wage growth is over 4%. That's not macro numbers that you're going to anchor against recession analysis. It just isn't. And so the market, in my estimation, the market is not entertaining a recession conversation right now. The market is entertaining the election conversation as we're getting very tight against the election, and the market is entertaining chiefly, for the most part, the earnings conversation.
Yeah, and so we'll detail the week after is kind of interesting. We'll talk more about that in the podcast, but it's nice when you remove this variable. It makes other things just easier in making your decisions.
There's just not a lot out there. Like if there was a major economic report this week, there would be a conversation over any major economic report.
I mean, the only thing I do miss is making fun of people that were bringing up the SOM rule, like they were economists, like, oh yeah, did you see the SOM rule? It triggered it.
Anybody who was using the SOM rule to trigger recessionary analysis 2 months ago should never be listened to again. I knew that from the very second I saw it. I called it out the very second on the podcast. I called it out in our newsletter. I called it out in the Traders Lounge. It was absolutely insanity, and it was obvious that people were just using it from a political perspective that had absolutely nothing to do with the market or the economy itself. And so it's unfortunate these days in America that we have to parse through nonsense, but that's what happens when you live in a social media universe. That's what happens.
Yeah. All right. Let's get to stocks in the news. This is the section where I bring 5 stocks. Matt doesn't know which ones. He can guess. Right. There's a couple easy ones.
Like bet ASML and Taiwan Semiconductor on
yes. Like I said, there's a couple easy ones every week, right? Where that I found interesting. You know, they weren't necessarily the most important stories of the week. Sometimes they were, but there were ones I find interesting. Let's start with Taiwan Semiconductor. This was the circle the calendar for me this week. Semiconductor health is very important to the market. It is very important to the AI story. Taiwan Semiconductor is one of the leading, tell me what the health of semiconductor demand is. Stocks. They're the leading manufacturer of semiconductor chips in the world. I don't know how you get more important in trying to understand total demand than that. Came through. Decent report, didn't they?
Yeah, they did. And I think it was really important for Taiwan to have a good report after ASML a couple of days before Taiwan reported. And I'm sure, once again, they're in your news as well. But Taiwan Semiconductor pulled off the hat trick. And for those of you that are unfamiliar with the hat trick, that's how we describe a really good earnings report at Tackle Trading, because we focus on 3 things: EPS, revenue, and forward-looking guidance. When you're looking at EPS, the average EPS beat right now is right around 6% in the market. That obviously needs to improve for the EPS blended growth rate to improve. Taiwan Semiconductor came out with an 11% beat against expectation. So, not twice as good as the market, but certainly close to that. They also had a 36% revenue growth number year over year, which nobody's going to scoff at from a growth perspective. And then, and quite frankly, the most important part of the conversation on Taiwan Semiconductor is what they did from a guidance perspective. And they did increase forward-looking guidance by about 10% total across the board when you're looking at 2025. And so they beat on EPS by 11%. Year-over-year growth was up 36%, and they increased forward-looking guidance by 10%. Nobody's going to scoff at that. Now, from a technical perspective, the gap out, I would call a breakaway or a runaway, probably a breakaway gap because you're breaking out of some degree of neutrality on the weekly chart. And so just overall a good technical backdrop that probably does need secondary pattern analysis. If you do not know what secondary pattern analysis is, I invite you to come hang out with me and Master Trader this week, Monday and Tuesday, and we will teach you all about that. But at the end of the day, it was a good report out of Taiwan Semiconductor. And man, oh man, I cannot tell you how important it was to have Taiwan Semiconductor come through after what ASML did.
Yeah, and that is my second stock, and ASML was a second one I had circled the calendar with. I actually don't have any circle the calendar earnings this coming week. I did have 2 this week, and the reason I had ASML is last earnings season, ASML came out with their earnings, and it set off a series of events that led to a very negative earnings cycle. There was a lot of market volatility. ASML can be pinpointed as last earnings season's catalyst. And so I had the calendar circled. Now, Matt, I had that calendar circled, but ASML decided to pre-report their earnings. So I was anticipating Wednesday morning, as every other market participant was expecting Wednesday morning. But according to the CEO, they had a technical glitch and reported while the market was open. Price action not only in ASML, but in semiconductors and technology was
the
brutal.
But it was brutal in tech.
It was brutal. ASML reported, and there was that moment of, are we going to do this in back-to-back earnings season? Now, it didn't play that out that way.
I just felt like when they reported, first and foremost, there was a lot of uncertainty. There was a lot of, I remember that moment very well because you and I were talking about it literally while it was happening. I remember talking about it in the Traders Lounge that day, trying to figure out exactly what they were doing. Because Mark, when they started selling, we didn't know what the EPS was. We didn't know what the revenue was. We didn't know what forward guidance was. Nobody knew what ASML was doing. In fact, nobody knew exactly why the NASDAQ was selling off until like 5-10 minutes into the NASDAQ selling off. ASML reported earnings. And then there was this moment of, no, they didn't. Like they report tomorrow morning. It had nothing to do with what they reported because there was so much uncertainty and shock that we were seeing in the moment that there was this immediate rush to sell first, ask questions later. And quite frankly, the pricing looked like a geopolitical event or an economic.
It looked like a geopolitical event at the very start.
Exactly. And then when it was like, wait a second, ASML is doing this. And then there was this rush to figure out exactly what the actual numbers were, because ASML is the catalyst stock in the AI conversation. And so there was this rush to figure out, well, okay, now we know ASML reported, we know they're selling. Was it that bad? Because it was last quarter that ASML was that catalyst stock that sent everything down, not for a day, but everything down for what felt like about a month in the technology space. And it's been a recovery moment ever since that from 3 months ago. And so there was this PTSD moment on ASML on Tuesday. And then all of a sudden, you look at the raw numbers.
Well, and Matt, like before you get in the raw numbers, the narratives carried forward for days. It's like, well, did you see ASML's terrible earnings? Like
ASML did not have a terrible report,
but people were talking about how terrible it was.
They're describing the price action
because they were describing the price action.
They were describing, Mark. They were describing ASML's terrible report. They didn't even know what they said on guidance. Yeah. They didn't even know what was being reported. They were just saying, "Oh my goodness, it had to be terrible because the price went down." That's not what happened on Tuesday. Yeah. What happened on Tuesday was you shocked the marketplace, and there was a moment of uncertainty, and this immediately sell first. But there's more than that on ASML. You cannot do this on earnings. This is an absolute cardinal sin pulled by ASML this quarter. You cannot misreport off the calendar in earnings. There are way too many decisions, way too many traders, way too many investors, way too many systems that rely on decisions made around that little blue dot on that chart. And so, for example, are you going to add insurance in front of earnings? Are you going to collar a trade in front of earnings? Are you going to pull off your straddle? Are you going to pull off your strangle? Are you just looking to make sure that you're out of the position in front of earnings? It had nothing to do with what ASML actually reported. You had to sell it based on the uncertainty, and then the follow through was not based on earnings. It was based on, oh no, we don't have confidence in this company. And I'm here to say right this very second, I don't have confidence in this company. And that confidence is not going to come back in the short term. It's going to take a very, very long time for traders to get more comfortable with the stock who is so terrible that you misreport your earnings. And I don't care what that CEO said about, oh, my bad, guys. I'm sorry. Traders will not forgive. They will not forget, and they will not come back, not in the short term, not in the long term. ASML is going to be an important stock for the AI conversation. But from a trader's perspective, from an investor perspective, they're not on the 66 companies that I personally track for the AI gold rush. They're not in the top 66 companies right now that I track. And yes, some of that had to do with what they did this past week, since I kicked them off the entire list before the AI gold rush event on Wednesday.
Yeah, absolutely. Let's fire through the next three to keep
By
on
the
pace.
way, they actually came out and beat EPS by 10%. They actually came out and had 3% year over
This
year.
is one of these market
Actually
stories.
came out and had 3% increase in guidance for revenue for next year. They did have some context over their EPS. My point is, it's a doji report out of ASML. It's nasty punishment on the chart, not because of earnings, but because you can't shock the market like that.
Don't do it.
Way unscathed.
It's interesting. It's one of those little market antidote
Every
stories.
CEO should have a trader that is whispering in their ear about these types of things. They are extremely important. And that I'm not kidding. I would fire that CEO if I was the board of directors of ASML. That is how important this is. This is 2 quarters in a row. We've had issues with earnings over ASML. You're not going to get a third. That doesn't work with the market.
All right, let's fire through the next 3 really fast. Netflix is my third. Always a sentiment check for me, right? Like Netflix is not the most important stock to the market, but can serve as a sentiment gauge. Like it has in the past, doesn't every quarter, but it's always better to have Netflix on your side than against you. And nice little report out of earnings. Let's not go into too much detail so we can keep on pace. Nice details, secondary pattern watch after the earnings, right, Matt?
Yeah, beat on EPS, beat on revenue, but the story on Netflix is typically about subscriber growth, even though they want to move away from that as a metric, meaning Netflix truly wants to move away from subscriber growth as a metric, trying to take it out of their earnings. But at the end of the day, Netflix beat on EPS, beat on revenue, but they didn't beat good enough to see a gap out and a run away. This was a really good number, not on just the EPS and revenue. They pulled off a hat trick as well, increasing guidance, but it was based on subscriber growth out of their ad tiered program. Real good numbers coming out of that. So Netflix gets the gobble up and gap up situation.
Fourth one is Amazon. A reminder, Amazon was in the news this week due to their investment in small modular nuclear reactors. It is just a thing now. If you are a big cap tech company, you're going to start buying nuclear facilities.
Yeah.
You're going to start. It's a thing. It adds to that segment of the AI theme. It is a very powerful narrative right now. When you think about the news flow from Microsoft to Google to Amazon, nuclear energy, the need for power, it is yet another reminder. This thing is going to be with us for
honestly,
years.
I think this is more of a story on Dominion and the utility side of the equation than Amazon, but I am glad you brought up Amazon. Amazon's the latest of these mega cap companies to invest in nuclear power, to obviously build out the server farms, the AI development. You actually had a utility stock land on the Tackle 25 AI version that we released this previous week. And if you do want that watch list, hit the link in the description as you can download that watch list and start understanding a little bit about the AI space. But Mark, you had Nextera, you've had Constellation, you've had Southern Company, you've had Dominion out of the utility space. These are companies that are investing in nuclear power. These are companies investing in the small nuclear reactors that these tech companies are building out, and it is not a short-term conversation. This is absolutely a long-term conversation. This is also why utilities, over the course of not just the last month or two, but over the course of really the last 10 months, have been some of the most consistent areas of the market, some of the best growth we've seen out of the consistent growth we have seen is out of the utility space. This is not a short-term conversation. It's a longer-term conversation. Utilities tracks technology as much as anything out there right now, and I do not see that slowing down. We have an energy problem from a variety of different perspectives. But when you have an energy problem and you're going into an AI build out, which is going to take a tremendous amount of power, I cannot tell you how much it's compounded, how much power the AI build out is going to take. And these massive tech firms, these massive AI firms, they're seeing a very efficient way to power it out, and that's to invest in their own nuclear power. And so whether you're talking about this story from a utility perspective or an AI perspective, or the individual mega cap tech company that's doing it, or you're just talking about it from a uranium perspective, which is going ham right now, because again, this is an extremely bullish growth story. It's a fascinating storyline. It's obviously one that's going to continue.
My last one on my stocks, a little sentimental. Steel Dynamics, STLD. I just like steel is a great cash flow area. And I liked seeing Steel Dynamics getting a bid after earnings. I just liked it. It just, steel being healthy increases the amount of things I can do cash flow on. It was nice to see old Steel Dynamics gap out. Secondary pattern watch on steel.
Yeah, a little bit, I would say. And Steel Dynamics for itself, they did come in with a beat. They came in at 205. Expectation was right around the 198. They did increase their revenue year over year. They do not provide guidance. To me, yeah, it's always better when we see Steel Dynamics trending, and we do like steel companies. They've been off the radar for a long time, though, in terms of just have not been part of like the conversation. Does Steel Dynamics do that? I do like the technical story more than I like the fundamental story. I didn't think their fundamental story on their earnings. I just felt it was a walk in the park. I thought it was a doji report. It gapped up. It was a good day to report on Thursday. And so, yeah, could you get a decent secondary pattern here? Absolutely. Would you like it more on the cash flow side of the equation? I do believe so.
Let's go over to global markets. Let's go to that silver breakout that occurred on Friday. Like whenever you have a commodity break to 12, 13-year highs, it's worth a comment or two. Powerful break on volume. The intraday price action. We were there in meetings together talking while silver was doing its thing, and it was like, oh yeah, this thing does not want to budge an inch on the intraday chart. We end up with a power candle by anybody's books breakout. It's good look. It's good.
No, it is a good look, and this is a breakout channel we have been talking about at Tackle for a long time, and it's been an improving conversation going into that. When you do look at silver, and I'm looking at it on the ETF right now, you have a confirmation close on every single time frame above that previous resistance at 29.5. You got above 30. You closed right around that 30.72 level. A really, really good look. Not a candle I would chase in the short term, but this is a major, major breakout. Any secondary pattern, and it would not take a lot if you're not already involved in this breakout. Obviously, you would be looking at a secondary pattern here. Silver, in my estimation, Mark, this is the starting point of something, not the ending point of something. And when I mean starting point, I mean the beginning point of a new trend. Obviously, there's trends within trends, but I do believe this is the beginning point of a new trend. And where could it go? When you look at it from a technical perspective, I do think 34 to 35 makes a lot of sense for a kind of target here. But Mark, I also kind of feel we're in a little bit of a longer term catch up story on gold right now too.
Yeah, no, and gold. Getting over to gold, And obviously, silver, we're going to be breaking that down in Traders Lounge all week. We've talked about hey, had an excuse to sell off. Oh, look, gold's doing the thing it always does. Doesn't want to sell off dramatically. Put in intraday bottom, started ascents, new all-time highs as we end the week. Yeah, I mean, it's gold. It's been the story of 2024. Played out that way the last couple of weeks.
Yeah, I got the close above 2,700 on Thursday. Saw continuation above that 2,700 on Friday. This thing looks like it wants to run a little bit there with silver. But once again, you look at the silver candle, you look at gold candle, both very good power bullish candles. But obviously, silver playing a little bit more catch up there. You look at GDX, and this is something that you got to keep your eye on as well, because GDX is starting to move very aggressive. You're above all shorter term resistance levels, obviously have really good momentum and trend. Kind of feel we're going to go up to 44 on GDX and then give us a beautiful secondary pattern. So let's enjoy the ride while we have it.
Go over the dollar real quick. If not now, then when? This would be an extremely logical place to take a break. You are at the 200-day moving average. You are at the old breakdown level. You are fighting weekly and monthly moving averages. Like, you've ran, you're in overbought conditions. Matt, if not now, when?
On the dollar,
yeah.
If not now, when is it kind of been the conversation for the last week or so. But you are at some very significant levels of resistance, and there's a certain pattern that I've been tracking here, and it's about time we got a big Mark. Do you think I'm surprised at in any capacity that we got a massively sizable green candle on gold and silver the very second we got a red candle on the dollar?
No, because it's been whole. I mean,
is that what I've been saying for literally 2 weeks? For literally 2 weeks, I've been saying, just wait, guys. The demand is being pent up in gold and silver. Just wait. We're so impressed. We're so impressed. And just wait until we actually get a pivot confirmed here. And so you got a beginning of something technically here, but you're still bullish on the short term. And you certainly would like to see some degree of hesitation here on the dollar. And if you do get hesitation at this point on the dollar, that should be a tailwind for gold, silver, and quite frankly, the market itself. And so the market, think about the market in the commodities landscape lately. They've been going up, all-time highs on gold, all-time highs on the market, silver with a momentum breakout. They've been doing all that and achieving all that in the face of one of the biggest sizable dollar rallies we've seen in the last couple of years, quite frankly. If you were to tell me, Mark, 3 weeks ago, the dollar would go from 1 to 103.5 without a pivot, and gold is at an all-time high, silver breaks out of that mid-tier, and the S&P 500 is at an all-time high with a high base, that's not the likely scenario with what the dollar's doing. The dollar usually provides a slight headwind for the market when it goes up and a big headwind for the commodity side of the equation. That did not happen here. And so now we're starting to see those early signs of the turnaround story with gold, silver holding up, copper kind of hesitating at the 200 daily moving average. Looks like commodities might want to run here a little bit.
Yeah, copper. This is a logical place for copper to form a bottoming pattern. You're coming down to the old breakout level on copper. You trade sideways here, moving averages on multiple areas of the chart. If you can just form a bottom here, well, it would be a logical place for it to occur.
You're absolutely right, but it's not just about copper here. Keep an eye on Southern Copper, FCX. They both report earnings this week. And if you do see anything to the downside on FCX, I think we got to look very closely if FCX gaps down. And the reason I say that is a couple different reasons. Number one, 46 on FCX is a really, really, really important number for FCX. That's right around the 50 and the 200. Earnings is coming up on FCX. Southern Copper also has earnings this week as well. So keep an eye. Copper is bottoming at the 200. FCX, Southern Copper have earnings coming up. Now, I don't know how they're going to produce. I do know Alcoa, which produces copper, but more so on the titanium side. They did have a really good report coming out last week. So it's going to be interesting. FCX and Southern Copper both have earnings this week.
Oil, not a lot to talk about. Sloppy chart, volatility. One day there will be better times, more analysis. Just not a lot to talk about here, Matt.
It's completely off the radar for me. It's been that way for about 3 months, and I have not. The number one thing I'd like to see here is a change in how the market, meaning how crude oil responds to headlines coming out of the Middle East. We haven't seen that slow down, although we did get some news coming out today on exactly what the Iranian response to is, the Israeli response to the Iranian attack from a few weeks ago. That has been the reason why crude oil has been selling this week. Do we see that continue next week? I don't know. There's so many landmines here, and excuse the bad phrasing there, but there's so many variables here that it's very, very difficult to understand where crude oil wants to go in the short term.
Now, Bitcoin is having a nice little week, and I'd like to start talking about something going on in Bitcoin potentially to some of the election things. Now, markets have ignored the election for the most part in previous months. We started to see a lot more chatter about the Trump basket of stocks and asset classes that have done much better over the last week than things that if Kamala Harris were to win, right? You know, so these banks, they put in like, who are the Trump winners? Who are the Harris winners? And the market, or at least certain areas of the market, have had this feel that as the betting market odds for Trump winning have increased, which they have over the last week, 10 days, these baskets of potential Trump winners have kind of matched the price movement. So you've seen betting market odds increase for Trump. You have, and pulling it up to a pretty healthy number. 60% is no joke in these type of things. You don't get much bigger than that.
Well, 2 weeks ago it was 50-50. Like that, that's what betting markets were 2 weeks ago.
Now, so, and we've seen things like Bitcoin, other areas that are supposed Trump winners kind of moving the algos. Let's call it what it is. The algos have been like, oh, as Trump wins, these are the areas that move. Now, what is very interesting about this, Matt, is this Wall Street Journal article that came out that basically said, and the Wall Street Journal is not exactly a liberal newspaper.
It's owned by
right?
Rupert Murdoch.
It's owned by Rupert Murdoch, so not exactly a liberal newspaper, basically saying that you can track the movement in the betting markets, right, is largely the work of just 4 accounts that have together put about $30 million of bets on President Trump. Mm-hmm. And the timing in this, I found this very fascinating. The timing of the 4 accounts moves suggests that they could be owned by a single owner. Basically, that they came in, helped move, the timing of these, the betting thing. And so you've seen a prediction market, which has had, in this market cycle, just from a market perspective, there's obviously larger political stories here, but from a market perspective, you've seen Trump winners move basically because a couple of large wells have been putting, or maybe even a singular one has been putting large, massive bets. That's very dangerous to follow those type of price trends. And it makes me want to step back from Bitcoin or other type of things that are influenced by that price action quite substantially.
I think that's very fair. I think it's fair because, I mean, you take into account, obviously, crypto trades on a lot of reasons, but when you're talking about just those dual choices of Harris versus Trump, right? Mm-hmm. Bitcoin's going to trade on Trump. It's
in the Trump basket.
Yeah, it's in the Trump basket, right? And once those betting markets, and the betting markets have shifted over the last couple of weeks, but you've had sizable shift over the last week and a half. And to anybody that's familiar with how gambling lines get set, it's not based purely on probability assessment. You have to price in where the money's going, because the gambling odds, they try to create net neutral for themselves, not from a probability perspective. And so, for example, let's say you have an NFL game and the line is -3 for XYZ team, and you have 3-4 wells come in and just put a ton of money on that line. Well, that line has to move. It has to move based on the money and has nothing to do with the probability of anything. That has nothing to do with how the house sees the actual probability of the event. I'm sure Polymarket probably sees this as, just we have to price in that so that we have to shift the odds so that we get more money coming back on Kamala, or they're going to have a sizable loss.
That's just that is casino management 101.
It has nothing to do with anything other than trying to create a win-win scenario for the house itself. And so I wasn't surprised to see Polymarkets. I'm fairly familiar with where the polls are right now, and it's a very, very close race. Like, regardless of what Polymarket says, it is an extremely close race. I think the national odds right now are Harris has a 1-point lead nationally. Usually Trump has a 2-3 point hidden, vote in those polls. Mm-hmm. And so a 1-point edge on Harris nationally would typically lead you to say Trump has a slight edge on the Electoral College. When you look at it from a swing state perspective, Trump has short-term leads in the Sun Belt states, Arizona, Georgia, North Carolina. I think Kamala has a slight lead in Nevada. In the Rust Belt states, you have, or the blue wall, we'll call it, Wisconsin, Michigan, Pennsylvania, those 3 states specifically. I'm sorry, they're way too tight.
Like any objective person would have a hard time not saying that, listen, there are going to be variables like enthusiasm on election day.
This is a turnout election. This is a
turnout election.
It is 50-50 right now, and it's a turnout election.
It is a turnout election. Whoever gets the enthusiasm, the turnout is likely the next president of the United States.
My point is, when you look at the polls and how the polls have shifted over the last 2 weeks, you could certainly understand somebody saying, based on just the polls and how the polls have shifted, that Trump has a slight edge, and that has increased over the last couple of weeks, I would say. But is that slight edge being portrayed in the betting markets, and the betting markets are having a more sizable shift?
And is it reasonable to have hesitancy in the stocks in the Trump basket to be safe?
That's the concern.
That's the concern. Yeah, it's like, okay, Bitcoin's ran 10%.
The Trump baskets are going up because of the betting markets and not solely because of the actual odds. What happens if those betting lines come back down to equilibrium?
Yeah, forget results.
Which they should results just based on how the odds works.
So if Trump drops to 55%, does
that
Bitcoin
brings it back down? Yeah.
And that makes this, like, just for Bitcoin and some of these things, maybe listen, I'm going to take a couple weeks
off. You don't want to chase it after a week of consecutive pricing.
And that's the main point here.
Yes, which I certainly understand that concern. And you can see it across the board in the Trump basket of stocks, but you don't have to go far. You can just go to DJT. Look at DJT over the last couple of weeks. As those betting odds have improved, DJTs went from $11.75 all the way up to $30, Mark. So, we actually had a really good conversation in the Traders Lounge this week on one of our students had a sizable position in DJT and how to go about that. And across the board, it was like, great trade, great job. But across the board, in the back of my mind, I knew what was happening because I knew DJT was going up on the betting odds, not based on a sizable shift in the polls. And so basically the analysis was, you certainly could see this continue. Obviously, that could happen. But Mark, you could go all the way out and think about this on a company like DJT. You could go all the way out, deep out of the money. We're talking all the way out to like all $60. We'll go all the way out to $70. Okay. You can go all the way out to $70. Currently, DJT is currently at $30. You could sell a covered call all the way out to $70 and bring in $2.40, $240, which equates to about 8% of a return on just selling a covered call on DJT. And so to me, it's not about, and I know some people will take this as a Trump versus Harris conversation. It's really not. It's about making the right decisions in the market. It's about
understanding what is driving
in the
I mean,
marketplace.
isn't that what you do as an investor, as a trader? I mean, I just is like, what is the move? Is that real? Do I believe it? Does it have a driver, or is it suspect?
Well,
Right?
and is there a little bit of just kind of very old school buy the rumor, sell the news type situation going on a little bit?
That's going to lead into a question I got for you coming up in my little five fun questions.
All right, so we both believe that the basket of Trump stocks that really trades on that is going up a little bit based on the gambling markets.
I think there's a correlation there,
Yeah,
right?
well, it would be impossible not to see that correlation.
And that if that correlation is a single dude or woman or entity, right? Who knows? I'm just saying, do I want to chase Bitcoin?
Now that's a conversation. Who is the entity that is pushing the gambling odds? That's a conversation.
I mean, do I want to chase Bitcoin up 15% on algorithmic moves based on that? I don't.
To me, it's not a matter of, oh my goodness, this is a great election conversation. No, to me, it's about the conversation of what to do if you're involved.
Yeah.
And like I was talking about with the student that had the question on DJT, it wasn't a matter of, oh my goodness, Trump's going to win and thus DJT is going to go up, or Trump's going to lose and DJT is going to get back the gains that it's gotten over the last couple months. It's about taking the information in its totality and making the right decision for your money. And to me, the analysis on DJT that we had earlier this week in the lounge was, man, take the gift that you're getting on this momentum, but instead of just getting out of it, because the momentum could continue, Mark. There's Trump's in the lead right now. That momentum could continue. And so instead of
listen, I got 30 mil. I'm gonna drop another 40 mil this week, bro.
Listen, the momentum could continue for a variety of different reasons, we'll say. But using the information is my general point. It's not necessarily, is the betting markets right or is the polls right? Nobody knows what's happening in 16 days from now. It's nobody knows. It's taking the information and making the right decision for your money.
All right, I got 5 fun trivia facts. We're going to enter a little trivia zone, right? So I've dug up 5.
Now, you know these. Am I going to miss all these? Am I going to?
Oh, you think I'm going to make this easy on you?
Okay.
Now, I'm guessing my over-under is you get 3.
I don't know. You're talking pre-election stuff.
Or no post-election. I just got election.
Oh, you got election stuff.
This is just trivia stuff.
So you're telling me if I hit 60% of your 5 questions, I did good?
I consider a win. I would consider it.
All right. So team, anybody watching?
I'm going to call it a draw because there's a couple you should get. All right. So I got 5 trivia questions.
Okay.
All right. My first trivia question. Now, presidential seasonality is different. We know September and October seasonality is a little bit wobbly in markets. Just in presidential elections, going back to 1950, right? So 1950, from October 1st to election day, is the market up or down? So you start on October 1st in election years only from 1950. Is the market up or down on election day itself?
It's tough. I'm thinking about a couple elections that had a sizable impact on that. 2020 was down.
Now this is going back to 1950, bro. So
I got to go back on the ones I know. I want to say 2016 was down slightly. I think you had some selling there. You don't always get an October surprise, but when you do, it is negative for the marketplace. 2008 was definitely down, although that was more September and a lot of volatility. So was it November's candle that? I'm just trying to think of the ones that I can do it off the top of my head. I'm gonna say slight down.
That is incorrect. Markets are up on presidential election years from October 1st. Now, what the seasonality of elections is, you tend to be down. This is why this was a tricky little question. Well, you do tend to be down towards the latter part of October. There has been a seasonal dip on October elections where you do towards the end of October. On average, you are lower than when you started. but there's a big surge that happened since 1950 heading into the week of the election.
Week of the election gets a surge.
Yeah, so the end of October into the
I was
week of.
trying to think about, okay, when does that surge happen? Because I do know seasonality starts kicking in second, third week of October traditionally, but that's outside of earnings, outside of elections seasons as well. And we've gotten some sizable surges post-election. And so I was sixes there, but all right, over one, go.
Okay, so next one, a little two-parter, and this kind of goes into what we were talking about like maybe buy the rumor, sell the news. Under Trump, did clean energy or traditional energy perform better under Trump?
Under the 4 years?
Mm-hmm.
Clean tech.
By 43%.
Energy was not good under Trump.
Under Biden, did traditional energy or clean energy?
By the way, that was not a negative on Trump, but I want to be clear on that. Energy had an entire decade where it was left behind by the market completely. Like the 2010s decade for energy was basically cover call while everything else went up. So that's kind of okay. So the second part of that question?
Under Biden, what did better, traditional energy or clean energy?
Sorry, post-pandemic analysis energy. Not even close.
Like, and so you get this one right, put this one in one for one. But this goes to the, like you were talking, well, Bitcoin's gonna be good under Trump. Be very careful, because I do believe there is a buy the rumor, sell the news element to some of this, right?
Sorry, these conversations in the market are bigger than just one person.
Yeah, like, so be very careful of like, well, this person, whoever wins, is going to be good for this, right? Like that
the United States economic engine is bigger than the president.
And so be very, very careful.
Because if you think about policy-wise, what those two, like that question, policy-wise, you would think energy did a lot better under Trump and clean tech would do a lot better under Democrats. That should show you that this market doesn't care about what they say as much as other people think they do.
Like, just be careful of being like, like I'm going to base investing decisions because a lot of that, like, you don't think you're the only one that's like thought about that, or if that's been priced in, or that, like, it's a tricky game.
It is.
That's
okay. So I'm 1 for 1. All right.
All right.
I mean, I'm 1 and 1.
All right. I'm going to give you a plus or minus. All right. Out of the last, I'm trying to think out what big a window. All right. So since 1984, counting the 1984 election, we have had. That was Ferraro Mondale getting trounced.
Yeah. Mondale got like 49-1 states. Like it was like
Mondale covered. He won the District of Columbia and Minnesota.
Minnesota was the only state he won, right?
And that was in question. He barely won that. That was his home state. So he barely won his home state, and he won DC. But it was
an ass whooping, is what it was.
All right. So counting that election, there have been 10 elections. This will be the 11th in this little time span. How many of those the next calendar year saw 20% increases in the market itself? I'm going to give you a window of 1.5.
So the question is, how many of the years from 1984 on? So the 84 election. So you're talking about 85, the 2000 election. You're talking about 2001.
Yes.
So we have, how many elections do we have since then? We got
10. There's 10.
10.
How many of those saw a 20% increase the next year? Which is a big increase, well above the average.
Big increase.
And I know Matt is not only, Matt is, what he's doing right now is he is going through each year in his head, and he's like, okay, what twist does Mark have here? Why would he phrase this as a question? Like, he's doing both of them right now.
I am. And I'm going to say I'm gonna say 6.
Now that is within the plus minus 1.5. So you're going to win this because it was 5.
Mhm.
It was 5, including
Now,
the
mind you, that was a big number. That you're talking 20. You're not just talking how many of the years went up. You
I
said
thought he might
20%.
guess on the low end. I thought, but he got it.
Are you kidding me?
He
Heavens
got it.
no. Even out of there's Mark, you're talking about years like 09, quantitative easing birth. You're talking about years like
Yeah, okay.
QE infinity.
Your stock market
2017.
history
You're
helped.
talking about 2017 tax code. You're talking about no. You're talking about 2020 coming out of 2021 where they were wrong on transitory and pumping money in. I'm sorry, my central bank. I just went back market cycle and I was off by 1, but I'll take it.
But the last 3 also 2012, 2016, 2020. So 3 different presidents won. All saw 20% gains.
It's almost like we
post-election.
We hate election years and we just celebrate whoever becomes president after the election is over.
I mean, those were very strong gains in
Very strong moves.
all of those, right? And there's other things that will happen, and we'll break it all down on all that.
I'm willing to bet most Wall Street analysts would get that question wrong.
But yeah, I think so. All right, I got a 2-parter. If you get either of these,
1 right now.
You're 2-1. If you get either of these within 1, you got to get within 1. Okay. And if you get, same 10 elections, okay. 1984. How many the day after the election had positive returns in the S&P 500? So the Wednesday, you have the election. The next day,
I don't know.
That next day.
8.
4.
Damn.
That was like only 4. The last 2 did. 2020, 2016, both saw bumps, but
2016 was sizable.
Yeah, so was 2020s, to be honest. Both of them, but only 4 the day after of the last 10.
I should have known that. We're getting more contentious, but man, okay.
How many? Same version of the question. How many?
Is this your 4th question?
Well, this is the tie up
right now.
Yeah, but this is part of the 4th. I said you could get either over because I knew this was going to be a difficult one.
Yeah, that was tough.
And so the next one's tough too. In the 3 months following the election, how many of the 10 were positive?
7.
I did not think it was 8.
Yeah,
it was 8. You got that one. That was it. So we generally see, if
I was going to say 8, but I'd said 8 on the previous one, so I changed it. But it was I was pretty confident on 7 or 8.
Yeah, so I mean, this is the seasonality.
Do I get a half point on question 4 then?
Yeah, I said within 1 you get a half point. It's a tie.
Okay, good.
So you've won this already, by the way, bro.
Well, let's get domination then. What's the last question?
All right, I'm gonna pull one that's that one's too easy. I was gonna give you who does better, Republican, Democrat. The correct answer is it doesn't matter generally. But I already knew you knew that. I could torture you with a VIX question.
Oh Lord.
Let us go with all right. Interesting little variation here.
Okay. And is
this is the last one. So the total returns before and after an election day going back to 1928. So this is taking all the elections from the known data in the stock market. Were the returns before the incumbent party loses softer or stronger on the presidential election? So the incumbent party ends up
we got about 24 elections.
So the incumbent party ends up losing.
Uh-huh.
In those scenarios, were the returns in the prior 6 months softer or stronger than when they end up than the 6 months after or the 9 months after?
So after the election of a change candidate, do we get a better market
Yes.
response?
Yeah.
There's not as many data points as you think with incumbents losing elections.
The incumbent party. The
Yeah.
incumbent party.
I'm gonna say positive.
The returns before are worse.
Yeah, that's what I meant. The returns after
Yeah.
would be positive.
And this comes down to James Carville as the
Market
economy
likes change
stupid.
candidates.
Well, change, and oftentimes when the incumbent party loses, there's some bad
Economically.
stuff happening. Yeah, so the data makes sense. All right, well done, sir. Well done, sir.
So I got a passing grade.
You did get a passing grade, and it's fun. These little stats, and we're going to talk more about
I
the
like quiz
election.
games. They're kind of, they'll test you. They'll test you. They'll test you.
You know, and I think there's a story here with the data. We're going to continue to talk elections a little bit more in the next couple of weeks as we lead in. But we are over time for now, Matt. Talk about that, Master Trader. Send us out.
Yeah, real fun podcast, Chucky. Thanks for hanging out with me here on the pod. And if you want to support the Trading Justice podcast, give us a like and share. Tell somebody about it. And if you're interested in coming and learning from us in this month's edition of Master Trader, it's on Monday and Tuesday, October 21st, 22nd. It's at 6 p.m. Eastern Standard Time. You also get access to an on-demand that you can take at your pace, free for pro members. The link to subscribe to the Tackle Trading Pro and thus register for Master Trader, it's in the description below. Hopefully we'll see you there as a in our amazing Tackle Trading Pro membership. And if you just want to become a pro member, hang out and get all the access to all the goodies from our traders report to our newsletter to our traders lounge that we do every single day with the pro members. Come over to tackletrading.com, sign up for a free 15-day trial there as well. With that said, I hope everybody has a wonderful, wonderful rest of the week. And if you need anything from us at Tackle Trading, you can email us at team@tackletrading.com, or you can hit us up in our Discord channel as well.
Have a great week, everyone.